push a mind to a limit where it needs to be. I work blind, got vision I don't need to see. I'm picking mind over matter, I believe in me. I need to find more hours in the day to breathe. Need to find more power in the way I be. And when my mind turns sour with the painful scenes, I need to scream out loud, I can't stop me. I wanna be the greatest like Rocky. You know I leave them all hating like a hobby. I'm out here making moves like a lobby. And if you ain't with me, it's you lost. See, I got my mind on the facts, I'm a python, grab what I like real fast. Choke until I have everything I attack, everything that I lack, everything that I want, and I see matter of fact.
Cause I'm my own worst enemy, only if I let it be. I can control anything if I can just think carefully. I control my destiny. Deep up in my mind I manifest it. Every morning I wake up obsessed, and everything I do the best. And deep within my mind, you know I'll always manifest it. I'm my own worst enemy, only if I let it be. I can control anything if I can just think carefully. I control my destiny. Deep up in my mind I manifest it. Every morning I wake up obsessed, and everything I do the best. And deep within my mind, you know I'll always manifest it.
What is going on, fam? Welcome back to another episode. My name is TradeFly, bringing you some of the most important market news as well as technical analysis that you can actually use. Bitcoin currently sitting just under 74,000. We had a pretty nice move. I believe it was on Tuesday. And that went up as high as about 73 to 74K. So that was looking good. But what was that area that we have been talking about for, I feel like, more than a month? That is 72 to 74,000. I told you that was going to be a line in the sand for me. And sure enough, I took a play off that. I did take a short. That is definitely was in the profits. I did close it. We were kind of hanging up, and I was like, I don't know. Like, I don't know if we're really going to break. We did end up breaking down. I should have stayed in it. Should have just took the stop loss to entry, but here or there. We did win a trade based off that call, 72 to 74K. That being said, let's go ahead and get over to the chat. Say what's up to the homies. I got my man, B Team Crypto in the house. What up to you, bro? Good to see you in the chat. We got Alexandra G, the best mod in all of the spaces with the GM. How you doing, lady? And then we got JT. What up to you? Good to see you in the chat. All right, let me go ahead and change this to live. Let me turn myself off because I can hear an echo. All right, we are back in the fight. I don't have to hear myself talk anymore. That is great. First things first, let's look at the crypto bubbles. You got Kite up 20%, Siren up 28%, and Bard up 58.1%. Ask me about those, I'll tell you. I have no idea. OKB, 18.3%, looking good. Meme Core, 7.4%. JST, what does JST even stand for? Because that's up 4.3%. Just, all right, just invest, I guess. There you go. Let's see, who's getting hit? Anybody getting hit hard? Trump down 7.3, Doge down 8.8, ZEC down 8.5, Virtual, World Limited Finance, right? Yep, that's down 7%, respectively. Yeah. So there's a couple trending in the wrong direction here. Bitcoin itself is down 3.5%. So altcoins starting to move a little bit in exponentially in comparison to Bitcoin. Not exactly want to see. Total market cap is at 2.41 trillion. That is down 3.11%. Fear and greed index is at 25. That is fear. Who cares about the altcoin season? It ain't here. Again, Bitcoin just under 71K. That's down 3.66 over the last 24 hours. Ethereum is at $2,075, and that is down 4.73%. Dominance, Bitcoin dominance, that is 58.9%. So that is actually working its way up. That makes sense. Seeing some of those exponential moves for the altcoins. Some of them are getting pummeled, by the way. Cardano definitely being one of those. Cardano is getting beat up. I think it's down like 20 to like 26 cents or something like that. We'll scroll down just a little bit. XRP is currently sitting at 141. Solana at 88. Not looking great for that. Tron's down just a little bit. Doge is down 8.75%. Cardano, there you go. That's at 26, almost 27 cents. Yeah, it has not been a fun ride for Cardano. No doubt about that. But that does round out the top 10 there. Okie dokie. Let's go over to 2Bit. They do have a, what is it? I guess I don't even know what to call this. Whatever. It's a chance. It's a chance to win 3.5. Well, your share. Let's be real about it. Your share of $3.5 million. So $3.5 million in rewards as well. I guess there's a Porsche out there. Okay, so I guess it's a contest. I'll say it's a contest that's going on right now. That is for the next 25 days. Come on over to 2Bit. All right, save yourself 20% on the fees. I give that right to you guys directly just by using my code. What is that code, you ask? Oh, TFSAVE20. All right. With that being said, shill, got that out of the way. Give you an opportunity to make some money, give you an opportunity to save some money. Let's go ahead and do the thing you guys love, though. That is going to be the daily DGen. And here we go. If you guys are new around here, this is the way it works. All right, you guys are 100% Doom, 2 votes. Come on now. We need more votes. Get some votes in. I know there's more of you in the chat right now. Get some votes in. Get some votes. All right, so 100% Doom right now. The way this works, I give you the opportunity as the audience to vote, whether we go long or short, and I will take that trade. Now, we put 5 on it. You know how we roll. It's nothing too crazy. We just like to have a little bit of fun here. However, I don't take it too serious. This is not how I do TA. This is not how I take any trades, to be honest. This is just an opportunity for you guys to interact and have a vote. Have a vote. Have a voice. All right, you guys are 100% Doom. It doesn't look like there's any turning back from this. All right, so we got 5 on it. We are not going to go 80x. That would be Banana Land. Here we go. 20x. You got 5 on it, and you guys are still very much Doom. So here you go. Bada bing, bada boom. We're in there. Okay, as you guys can see, if you're keeping count, all right, we started this count with $10,000. All right, 10,000. We are at 14,562. So that's a nice, 45% return so far. Looking good. Looking good over the last 2 months. Loving seeing that. All right, so you're in there. You guys are up 1%. We'll come back and check on the daily degen. Don't let me forget. All right, don't let me forget to come back. Actually, you know what? We got it. Let's not be silly. We got to protect ourselves. You guys are doomed. This works. You got a high volume area node. See a rejection right there. And let's go ahead and find ourselves a TP that makes sense. It's going to be hard because you are right there. Right there. We'll do that. We'll take it down to the bottom of the range. Also, you can see here where you had a little bounce and support. So that'll be our TP and our stop loss. Again, not how I trade. Obviously, it's all out of whack in terms of the risk to reward. But, you know, we're just having a little bit of fun. Having a little bit of fun here. And it is all good. Let's look at the economic calendar real quick. You got non-farm payrolls, retail sales month-over-month, unemployment rate. That is going to be on Friday. And then next week, you got existing home sales, yada, yada. But Wednesday's a biggie. You got core inflation rate month-over-month and year-over-year, as well as inflation rate month-over-month and year-over-year. Okay, so those are going to be biggies. Those can move the market. I'm not going to deep dive, all right? I'm not going to be like, hey, this or this. Like, just know it could shake the market. You'll let the numbers come out, and you'll see how the market reacts. It's that simple. And if you're in a trade, expect some volatility. If you want to get the alpha on it, though, go check out Army Piper. He will break that S down for you as much as you want. All right, liquidation heat map on the 3-day. We're going to take a quick look at that. All right, you can see we have liquidity below us. All right, so these are where stop losses are, liquidation events, right around 70,250. Remember that number because that's going to come in play again here soon. Okay, so hotspot on the map is below us. All right, that is below us. Don't be surprised to see a wick down to at least take that liquidity, and then you would look to see if we move back into the zone. And we'll talk more about that in terms of a potential position. Let's look at it. So yes, we know liquidity's up here. Let's adjust this one. We said 70,250, right? So let's mark that. Boom. That's close enough for government work. 70,251. We'll take it. Now, what does that align with? Now we're on the daily right now. Okay, so it aligns with your value area high, pretty close to your monthly pivot, and pretty close to a high volume area node. So you do have confluence here with that area. And of course you have liquidity. This is what I love to see. Okay, I love to see when it comes down, takes this liquidity off the table, 70,250, and then we find a technical reason for a bounce. High volume area node, monthly pivot, value area high, all good things, all areas where you could see a very logical bounce. You also have this trend, very sharp trend to the upside here, acting as support currently. We'll see if that holds up. I won't put too much weight into that, but this range between 68,700 to about 69,700, I think is a very logical range to see some price action. By that, I mean a potential bounce. You're retesting the highs. All right, so you're flipping resistance into support. I think that would make sense. You clear out liquidity. That makes the maker happy, makes the exchanges happy, and then we can get a bounce off of a technical. So be on the lookout for that. Not saying that has to play out, but it's something I'm going to keep an eye on here in the near term. What would that look like? Let's go. We'll look at the high volume area node now, because you got to get a little bit of movement to the upside before you can really jump into that, right? And then we're looking probably here back at the bottom of right under 72K. How do we protect ourselves? You know, that's kind of the biggie here. Can you get a 2-to-1 here? I think it's going to be close, but I think yes. And that would leave you some room to come down and fully, even if we were to push this up a little bit, like if you were to push it up to the value area high, bring that down just a little bit, bring this up just a little bit. I mean, the 2-to-1 is surely there in my eyes. You're just going to have to see that wick come down to the monthly pivot and then work its way back up and reestablish above the this little zone right here. But again, I think that's in play. And that gives you a 2-to-1. That's about a 3.4% move with a 1.62 drawdown. Keep your eyes on that. So let's talk a little bit. I got called out a little bit on the last episode that we did, based off of me looking for a potential short. I believe it was from this level. Now I don't have it because I go through some of these and I don't necessarily, you know what? I might have saved this. I might have it actually. Let me double check. Let me just talk through it. It's all good. It's all good. Because there's nothing that I'm trying to hide here. I'm not trying to be one of those guys to be like, I make a call or I say something and then I don't take accountability. Yes, I did talk about a short. It did push through. But one of the things that I am usually pretty clear about mentioning, I may have, I may not have, you know, I can't remember every word that I said, but one of the things that I'm typically pretty clear about is if there is an impulse move through a zone when we're looking at potential short, then that's not a trade you can take. So hopefully you guys understand that. I know a lot of you have been watching the show for quite some time. I'm usually pretty clear about that. And I may have slipped on this one. I'm not 100% sure. I'd have to go back. But here nor there, when you see an impulse move through this candle, right? You see a nice move, then that's you can't jump on that trade, right? Like you would have to see some kind of selling pressure or some kind of price reaction to give you an indication that, hey, like now we can look for a potential wick back into the zone. So I don't know, man. I just want to like point that out to you that like there is very much an if then when I'm looking at some of these key levels. There's a reaction that has to happen to those levels for you to be able to take that. So like in this case, you would have been looking for a wick, not an impulse move or a large body candle. I usually am pretty good about saying, hey, if you see a candle that looks like this right here on the left hand side by my head, all right, see this big old green candle, like that's not something you want to mess with. This one right here, same thing. Like that's not something you want to mess with if you're looking at a potential short. I just want to be clear about that, and hopefully you guys understand that when you're looking at some of these setups, right? So same, see this big red candle here. If you see something that looks like that and it comes through this zone, all right, you're now looking for what's called a breakout retest. You know, that's what I would be looking for, and that's kind of what you're looking for right here. This almost kind of, I won't say almost kind of, that's, what does that tell you? That tells you nothing. But it explains my point to a sense right here. So yeah, I would be looking for something like that. All right, so you come down and then just a move up right there and then get out, right? Like I don't have to see it go all the way back up, retest to 50 or any of that. It's just we come down, we retest the highs of the range, and then you look for a bounce to push back up, you know, about 3%, and it's out. All right, wham bam, thank you ma'am, thank you, come again. But that's basically this: impulse move through, come back down, retest, and then look for continuation. However, we're being conservative, or I'm being conservative, and I have found an area where I think there could be resistance, and therefore I would exit there. And you're like, well, you know, you could take this, it could be a good swing trade, it could go way up. You're right, it could, but why not just wait, break really the key level? And let's be clear about that. 72 to 74K in my mind is one of the clearest levels on this chart, and it's not particularly close for me. So I'll take a picture of this real quick, just so I have it. All right, cool. 72 to 74K. All right, you got the 50 SMA. It's been a very big factor in price action here recently. As you can see, there was a rejection. From a horizontal perspective, you have a high volume area node. You also have, or had at some point, I thought the 618 aligned there, and I believe it was from this move right here. So once we had this breakdown from this range right here, no, that was not the 618. Where was it actually from? Where was it pointed? Maybe it was this one. Let me see. Let me get to the bottom of this. I think it was this one right here. Yep, it was. There you go. So yeah, you had the 618.786 kind of right in the zone there. Alex O loves that between the golden pocket and the 0.786. He's always looking for those zones, and that's exactly where we reject it. But the horizontals, let's go back. We'll look left. All right, very clear area of support right there, where we bounced off that zone. Here, impulse move through. Right, you get the impulse move right there. That's important. Rejection right there. That's important. Rejection, 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 rejection. Okay, so 1, 2, 3, 4, 5, 6, 7 times. And then even here, right? Before we ultimately got a breakdown, it did try to bounce. Look at the wick that came out of that zone. So that just lets you know that it's a very important level in terms of price action. There's obviously willing buyers and sellers at that level. It's just something that retail, or even maybe it's institutions, I don't know, are keying in. There are people that are keying in on that level at 72 to 74K, which tells me it's a very, very key level. Not surprised to see a rejection out of there, but also if we finally break that area, right? And right now the pressure is to the upside. All right, pressure's to the upside until we lose this little micro trend here. This is something to keep an eye on, right? A little push up, rejection, come back down, retest the level, and then look for continuation up to potentially the where the 0.5 is right now. And that's kind of the top of the range. What does that look like in terms of a move? About 5%. And, if you put just a few X leverage on that, it's a really nice move, right? You're looking at a 15% move for, this little breakout retest of 72 to 74K. Now, what does that do? And why do I say it's so important, besides that you have a lot of confluence between, horizontals, volume, and everything I just pointed out to you, moving averages. It also is going to give you a change of character, right? So if you're finally changing the structure, right, you're breaking out of this consolidation, this range here, and we're finally doing something different, because understand it's been kind of a stair step. It's been a stair step, right? Since all-time high, we came down, ranged, broke out, ranged. The scary part about this, and I want you to look at this. Look at how we kind of ranged. We had that ascending level of support. What happens right here? This looks a lot like manipulation, right? And I don't mean in a sense of like the market's being manipulated. I just mean like as a concept of trading. So, you're accumulating, you come up, it looks like manipulation and distribution. So this you have to be very, very careful of right now. Do not get ultra bullish, because that we have seen play out already, where you got a nice move up, solid move to the upside. Everybody's happy and think that everything's okay. And then boom. Like this is the end result. We came all the way down here. So you got to be careful, understanding the 4-year cycle, understanding if you listen to some of these guys, if you listen to Ben Cowan saying, hey, March will probably be bullish into April, May, and things return to kind of trending to the downside. Everyone that's into the 4-year cycle, I believe, is expecting Q3 of this year, right? So just understand that, don't get uber bullish right now just because we pushed up a little bit to the top of the range. It's clearly, I won't say clearly, this could only be taking some of this liquidity off of the table before you see a move back down into the range. So just, again, be very careful of that. Sorry, I was coming over the chat real quick. B-Team said, you're a very clear TradeFly. Don't sweat it, brother. We hear you. Yeah, man, I appreciate you. I just want to be, uber clear about it. I try to be very much about transparency. I show you wins. I show you losses. I don't BS. I take trades. I put my money where my mouth is. I do it live. I'll go live special sometimes. I've done it on Sundays just to be like, hey, I'm going live. This has been a big area we've been talking about for months. And I take those trades. And, one of the things too, to kind of validate what I'm talking about here with this move to the upside here. Yeah, I was looking at potential shorts, as I should have been, but, I didn't trade that. Right. So if you're over in the Discord or, one of the Discords, I try to be, get ahead of this and be like, hey, I'm looking at this trade. And sometimes I'll be like, hey, I'm in this trade. And then I'll post the P&L afterwards, just so you guys really know. So that's all. I just try to be honest, and I want to be clear about that. So I can't remember what the name was for that left the comment. I just wanted to address that, and hey, man, welcome. Hopefully you enjoy the transparency. So, all right. So looking at that, one of the biggest things for me is be very, very careful right now, because it's very much on the table that you could see that move down. Now, that being said, you got the monthly pivot, you got the volume high, you got the trend line, you got volume, you got a lot of things right now that could potentially act as support. This would fall somewhere between the 0.382 and the 0.5 Fibonacci retracement level as well. So, it's it's not a terrible area to look at for a potential bounce. But I think that's going to tell you a lot is if, hey, we get a bounce out of here and we start retesting this 72 to 74K, that's going to be a bit different than this right here, right? This came up, rejected, see ya, right? Like what I'm talking about is like, let's say that it comes up and rejects, comes back down to the 0.382, value very high, or 0.5, probably about right here. And then we come back up again, right? That's distinctly different. And that would change the narrative a little bit, right? See how you kind of had this trend up? Very similar. It's not perfect, but it's similar, right? Had that trend up. And then would we see that bounce here? After you get the liquidity swept and taken off, do you get a bounce here for another push up, right? That's kind of what I'm talking about right here, is do we get that next push up and try to retest these levels again? If that happens, you start to feel a little bit better about that scenario of where we actually push up above 72 to 74K. So that is something that, you know, I would keep a very keen eye on. I think the higher probability play right now is probably, you know, looking at the breakout. If you get that, if you get the breakout, you get a breakout retest, move back down to retest this zone, and then you see that buying pressure. And then we talk about what's the trigger. How would you know if you're likely to see a bounce out of that zone? And that's where I like to go over to the order flow. Okay, I come over here and then I start looking like, okay, what's the open interest doing? What's CVD doing? And so in this case, all right, let's talk about that. What you're going to want to see, you know, in this, and this is if the price goes back down, right? But there's a couple things that are happening right now that I want to point out to you. There's an order block here. All right, an order block there is more significant at about 70,200. All right, but there's an order block here. But what you would like to see is this open interest needs to turn around in my eyes. You want to start seeing open interest go up, as well as a continuation of the trend right here. Okay, so for CVD, you would like to see that continue to work its way up as well. Now, obviously, there's going to be a little bit of movement here in the near term. It'll probably not play nice to get to where this liquidity is in terms of some of the orders. But, I mean, look at this right here. You come to the order book, and you can see Big Daddy on the chart here, 70,200. So I would say mark that on your charts. Mark that on your charts. Does that come into play here in terms of looking back? Yes, because that is exactly, remember when I said we're going to come back to that? That is exactly where the liquidity is at 70,250. It's amazing how that lines up. So 70,250, and then you got all of this going on down here. Again, value very high, monthly pivot, you know, and this could update by the time it actually interacts. But here or there, you got a lot of confluence down here at about 70,000, really 70,250. I mean, that probably should be kind of your starting point of analysis, or where you should put your alert is when it gets down there. And then you can see if it wicks down and interacts with any of the, you know, any of the technicals down below it. All right, so that's a pretty big look at Bitcoin. Again, the structure has kind of remained the same, right? Since we've lost the high or come off the high, you know, it's like a stair-step approach right now. We really haven't shown something different yet. Not yet. All right, so getting close. The opportunity is there, but we got to get some follow through. So keep an eye on that. And again, be very, very cautious with seeing something where it takes the liquidity and then works its way down, and then we do the whole game over again. That's not what we want. Hopefully it doesn't happen. Get rid of some of these lines here just to clear it up. But yeah, that's something for you guys to keep an eye on here. Let's see here. Let's go to USDT dominance. Let's see what we're doing here. Did come down to the 50 SMA. Got a little break of structure, but a nice clear bounce. Tested the top of the range. Man, let me see. Let's do a fib retracement off of the low to the high. And that goes to about the 0.5. Right there along with the 50 SMA. It did lose the high volume area node though. I mean, that was a little bit higher. Pretty much where the 0.382 is. So if you wanted to see continuation which you don't, if you wanted to see continuation of the movement here for total market cap, you would have liked to see it bounce here at the high volume area node 0.382 and then get that move up. But right now what you're seeing is actually a break of structure on the daily. Now this candle is going to have to close. Let's go to the 4 hour. Let's see what the 4 hour is showing us. I came down to the 0.786. That's probably based off this low right here. Okay. All right. So that would make sense a little bit, but you're pushing up into resistance, and that's actually a good thing. All right. So you got the... I'm not going to get too carried away with that. Don't really pay attention to the 618 here in this case. But you have convergence between the moving averages, high volume area node, kind of sort of the bottom of the range, right? That's up for debate. But maybe you could take this trend right here of the lows. But I mean, I guess what I'm getting at there is you're probably pushing into a little bit of resistance. And if you're pushing into a little bit of resistance on USDT dominance, that is a good thing. Okay, so if you come back up and you see a rejection out of this level, right? You got convergence there, high volume area node. If you see a rejection, hey, that's a good thing. Why? Because the inverse correlation. Oh, I done did it. Gotta click. Come on. You can do it. There it is. Round two. I think I'm just gonna stick with drawing the darn there it is. But you could get a move back down. All right, so that right there would open up what for Bitcoin? All right, USDT down, or dominance down, Bitcoin up. So that's what you would want to see there. Let's look at total market cap, see what that's doing here. Okay. All right, this is something we wanted to see right here. We had this clear horizontal. What did we want to see? Breakout retest. Took a while to get there, but look, this is a nice little impulse move through. Retesting the zone right now is what we're doing. Oh man, that's pretty key level. You want this to hold. You really want this to hold. It's not over, but this would be the ideal situation, that you bounce off this level here and then look for that move up. I mean, your next big spot, to be honest with you. I mean, you got the 0.786, the bottom of this range here, but your next big spot's up here at about 2.63. Not completely over though. You can come down to 0.5. You got the convergence here with the moving averages. Again, you got more volume down here as well. Right about there. So anywhere between 2.32, 2.35. Coming down, finding some support there. That would be okay, right? That's fine. You definitely have confluence there. This is just the ideal. Is that, hey, we get a nice breakout, impulse move, breakout, retest, and look for that continuation. That would be ideal. Now, you get that. You get this move right here that goes up. Then that, my friends, would be good for Bitcoin. Now, you may not make it past the 0.786. I understand that. But you may have a couple of rejections, little waffling around in there, just like this, right? But maybe it stair steps up. That would be nice. So keep an eye on that. You're at a critical level right now for... Let's go ahead and move this over just a little bit. There we go. It's not all over the price action. That would be nice. That would be nice. And again, if you're having confluence between the charts, that makes you feel a little bit better. If you end up in a Bitcoin long, and you start finding yourself having confluence between USDT dominance as well as Bitcoin, in terms, let's say you're getting along, right? Let's say we break back up into this region or the zone above, I would say at least above 2.42. You break above that, right? And then you're looking for a potential long, you may close it or get close to closing it at 0.786 and just seeing where that, aligns with USDT dominance as well. If you have confluence between the charts, it's always helpful. Always helpful. Let's see what Bitcoin's doing right now. I think you guys took a short, I believe. What's that looking like right now? Nosy gozies. That's not too bad. Kind of ranging a little bit. Again, this is the daily DGen. If you guys are just kind of tuning in, give you guys the opportunity to vote long or short. Man, that thing almost got stopped out. Oh, good. So let's look at CBD. and open interest. What is that doing? What is that telling us? CVD still kind of trending to the upside. All right, so a lot of times when I see that, if I see the CVD trending to the upside, you know, I would be very cautious about taking a short, to be perfectly clear with you, right? What is that indicating? That the long positions are more aggressive, right? So simply, you know, like let's say that open interest was like going to the upside, which it is not. But what if it was? Man, wish it worked like TradingView sometimes. Let's say that it was going to the upside. This would mean that longs, there's positions being opened. In this case, it's not. Positions are being closed. Let's just talk about what's happening. Positions right now are being closed. Now, understanding that can be a little bit misleading because we just had a move down. Okay, so we just had a move down. What does that now mean to you, right? If you have a move down with price action and shorts were being opened or shorts were more aggressive, you know, what could be happening? Well, they could be closing them, right? Closing them and taking profits, or, you know, maybe longs are covering. You know, that's a possibility as well. But you do have an order block here. And then positions are being closed right now. So then what you're going to wait for, if you want to take a long, what I would say more ideally, what you would want to see happen is we get a wick down in here. We fill some of these orders and you see open interest go up, CVD go up. But right now, let's see, you guys are from this little range right here. It looks like CVD is trending up. All right, so positions being closed. So they could be building a long position right now. Or it could be absorption. So one of the things I like to do, we're going to take a little box. Not super user friendly. All right, so there's your box, right? There's your price action. Now that we have that kind of marked out, then you'll mark your CVD. And I only do this because it helps you kind of formulate a little bit more of a bias. Now, open interest is clear as day. You don't really need a box for that. But you can see, ultimately, like where we started, it's still a little bit lower, right? But this is not, honestly, the way it is right now, kind of going horizontal. It does have a little bit of an uptrend since it came down. Yeah, that one's tough. Like, I wouldn't take a position from right here. There's certainly no doubt about that. I would not take a position right here. Open interest, like I said, I would like to see that start to work up before I would be interested. And then, of course, continuation of CVD. But ideally, I would love to see it just dip its toes down in here, especially around the 70,250 area. So then you know that liquidity is gone. Order book, right? You got passive orders. All right, so you got passive orders right here. Sitting right here, waiting to be filled. So they get filled, CVD goes up, open interest goes up. That's kind of a nice little trifecta there to make you feel a lot better about getting into a position. And that would kind of go back to what we were looking at earlier. And again, you know, just to reiterate, because we talked about it a little bit earlier, was if you get a big candle that pushes through this zone, right? You don't get a wick, you don't get a reaction to the order block, then it's invalidated. And I just want to be clear about that. So we like to see liquidity get taken off the table first, right? And then reestablish the zone, right? So you would have to get back above the low here. You would have to get back above probably about 70,600. You know, candle close up there. That makes you feel a lot better. Makes you feel a lot better about taking a long position. Let's see here. Let's go back to the charts. We'll look at ETH real quick. go to the daily. We'll zoom out. Very similar, right? Stair step down, consolidation, boom, dump. And looks very similar to Bitcoin right now, honestly. It's not really diverging. So it looks like we were looking for a short here for Ethereum. Yeah, that was a call that I gave on the last show. Hey, buddy, if you're watching again, this one played out quite nice, did it not? There you go. So that would have been a winner. Winner, chicken dinner on that one. 2.79, about a 3.446 take profit there. So good call on that. Got a nice little SFP. We'll get rid of that. But yeah, on the daily, nothing too crazy. I mean, same deal. Comes up, takes liquidity, back down to the range. Nothing too crazy. Honestly, like this is, if you didn't jump on that, I would say just be careful because, you know, you're same as I talked about with Bitcoin, you're running the risk of seeing a little bit more of that continuation of the outside. So POC of the range. Let's go ahead and update the fixed range volume profile. Let's go 4 hour. And then we'll update this. Where are you? There it is. We'll update that, see where the POC is and the high volume area. So that's kind of a nice little spot. I wish there was, man, if these moving averages were a little lower, that would have been sick. Because then we'd have like Confluence City. That's on the 4 hour. What's the daily show you though? That's probably way above you. It is. 8 hour? Way above 1 hour. Okay. Yeah, I kind of like that area though. You got the trend line, POC, high volume area node, all around about 1972 for Ethereum. Kind of in between the 0.5 and the 618, but still. May not be bad if you're looking for like a continuation type move. Those ones a little harder for me. Like this I like because you can see like where liquidity is, take the liquidity off, take the short, get it, got it, easy. But these ones where you're taking kind of these continuation moves of like, hey, you got a trend line and you got to really bank on the fact that, you know, that trend line holds up. But at least this one, you have the POC as well as the high volume area node. This wouldn't really suit, you know, my liquidity sweep type setup, you know, so I won't say it's an A+, but you know, it might be an opportunity here. So up to you on how you guys play the game. I won't say it's like a high conviction play, but definitely something to keep an eye on here. Back up to the value area high. Let's see. Bring that in. Has a lot to do with the wick too. I mean, you could get a 2-to-1, but it's tight. Very tight. At least that, it gets you below the 618 and this high volume area node, just below. A little 2-to-1 up to the value area high. Definitely in play here. I wouldn't say this is, again, not an A+ setup, but just a little move. Yeah, you would have to retrace a little bit harder than that to get your 2-to-1. That's going to be tough. I don't typically like jumping into something I can't get a 2-to-1. I don't know if that one's going to be it. That's all dependent. I mean, this trend line's just, you know, you're kind of just working it and just seeing, hey, like, where do I interact with most of this? It's not like it's got to be perfect. Yeah, that could be a possibility there for Ethereum. But the play is what I had up, so hopefully you're paying attention on the last one. I voted Moon. Well, friend, looks like that played out ish. What's it looking at right now? It's getting darn close to the old stop loss. That's all right. It's pulling back there. I just, you know, looking at why would it leave liquidity here? if you got those orders on the books and you got the liquidity here, like, I don't know, why leave it? I mean, look at that. So come down, take this liquidity, and then push back up. You know, why leave it? Not saying it has to happen, but it does happen a lot. This is on the weekly. Yeah, so the bulk of liquidity is below, and 70,250. I don't know. We'll see. We shall see. Remember, I mean, we kind of just hang out and wait for it anyways. And then we'll make a decision or formulate a bias once we have that interaction. Get the liquidity off the table. Take that out of here. Like this, like take it out. You get out, and then we can start making a decision. All right, let's see here. Here, a quick look at the NASDAQ. Nothing crazy. 4 hour. Let's just go to the daily. So NASDAQ trying to hold up. It's got a little range. It's starting to develop here. It's showing a little bit of weakness. All right, a little bit of weakness. Great. There's an amazing push up. This was unreal, to be honest with you. Let's update this. This is probably not right anymore. It's close. It's close. So you got your range demand. I mean, I like this though. I mean, you're looking at the 200 SMA on the daily. But you did lose this high volume area. So yeah, just trying to hold support right now. I think if you lose probably around 21.7, you might see a little push down, maybe to the bottom of this range, into the range demand zone. Let's see, how does it usually react when it loses the 200? You got this one, nice V shape. Bro, it's been a hot minute since it's really lost the 200. Talking about 2022. This was the tariff stuff. So this is interesting. We'll measure it though. Let's measure the last two. I just want to get a frame of reference. Lost it. That came down 30%. Lost it here decisively. And that one was about 20%. Just looking at the volume. Let's say we lost it 20%. Where does that put you? Around 618. I don't see that. I don't know though. Who knows? A lot of crazy stuff going on in the world right now. This is if we come down, this was, man, it was overlapped with the 0.382 for a while. That would have been primo. But you can see you got some volume here. You got the top of the range. We have a penchant on a lot of crypto stocks, whatever it may be. Whatever it may be. When we get these extended, areas or these ranges where you see a lot of consolidation and very distinct highs of the range, have a penchant to come back down and retest that. You see that quite a lot. So it'd be one of those areas where I'd be looking for, if price action were to work its way down, not saying it's going to. If it were to work its way down, that would definitely, that's still, that area has been highlighted for quite some time, right around 20,000. That's where I would be looking for, some price action there. Probably front run it with the 0.382. Why not? But to retest the highs of the range would make a lot of sense. Thought the vote was always moon. Yeah, there's no other way. We got Squid in the house. What up, dude? Good to see you, man. Hope all is well with you. Let's see here. Let's look at strategy. Yeah, I remember talking about the 0.786 coming down to the bottom of this range, looking for a bounce. Hell of a bounce. Hell of a bounce. So you moved. I mean, to where you're at right now, about 28%. That's wild. Still wouldn't be uber bullish on it though, honestly. Still got a long ways to go before I'd really truly feel comfortable. 0.786, hey, that's a technical YOLO in my mind. I mean, just, yeah, we came to a strong technical area, bottom of the range. You had confluence between the two, but I mean, really, you lost the high volume area. Now you're kind of flirting with that. So you could get a move back up to this next one here, where the golden pocket is. Probably get rid of this. Nah, I'll leave that. Because this is from the high to the low here. So they just happen to be overlapping. But you could get a nice push up, but is that where it ends? Is that where the party ends? And it's the previous POC. You don't want to get caught with your pants around your ankles where it just comes up and then, you come back down and you get upside down in it. So either you get in here, which I'm guessing probably most of you didn't because I didn't. Like I said, that's a technical YOLO. But you get above the range here. You get above this high volume area. That kind of opens the door for some movement in my mind. Back one up to about where this 0.5 is. Of course, this is a fib retracement from macro low to high. And then you're just looking at where did you find support. That right there is, I'd say, a pretty logical move. Somewhere around 190, back one up to about 235. I think that would be a more conservative play if you were looking at strategy. I know some people do that. They see it as a leverage play. More power to you. If you want a leverage play, though, why leverage it on strategy that has a crazy business model when you could just use BITX? You never learned about this. Here you go. You want to leverage the Bitcoin position? 2x Bitcoin strategy ETF. BITX. So there you go. Get 2x that puppy. That's your ETF way. And then BITU. Let me see. Which one is one of them's a short. Biddy. Yeah, Biddy's the short. That's what it is. So you want to short Bitcoin with an ETF? Biddy. You guys didn't know, now you know. Don't have to use the exchanges if you don't want to. You could do it on an ETF. Just understand how it works. Remember, crypto is 24 hours. Shit gets weird, you're stuck. When you're on an exchange, shit gets weird, the exchange just has to work. Which hopefully it does. There's been times where it hasn't. Let's see. Scrolling down. Haven't looked at Cass in a while. It's been getting its ass beat. Let's look at Cass. There you go. Yep, I remember talking about this. So, looking at this, we wanted to break this horizontal right here. It's funny. So funny. Because look. So we were looking at it. We're like, all right, cool. We want to break this horizontal. We want to break out of this trend. And you want to retest that area to see that continuation up. Where did it reject? Right off of that horizontal. Right off of that trend line. And you ended up going down. Right? So this is why I'm a big proponent of the breakout retest, right? When I'm talking about that, I'm saying, hey, breakout. I mean, right there. Right? That's where we'd be looking at an entry. And it's right at the level that you saw the rejection. So again, you get that impulse move, right? Apparently I got to be more clear about that. I'll be better about being clear. This right here, impulse move through the zone. What does that mean? No takesies. No takesies, right? Not if you're looking for a short, but that is what you're looking for. If you see a breakout retest, you would like to see a retest and then continuation. It didn't, it lost. It lost the horizontal, came back down, retest, and then boom, down. So, all right, but let's see here. Golly, that looks bad. You know who was all over that though? Was Retro Mike. RMT, man. He was F-bombing Cass for the longest time. It's like whenever I would mention Cass, he would just show up in the chat. Cass has been bad to me though. I'll be honest. Lost some money on Cass. Yeah, this is just ugly. I know that Crux is, you know, he's still bullish on, I guess, the fundamental side of Cass, but like, man, there's ain't nothing you could say or do right now to get me to jump on that one. Nah, I'm gonna stay. I'd stay clear of that just altogether. I mean, you are testing. You're testing the trend line right now. You could get a little breakout. There could be a play here. You know, short term, up to about. Be careful. I would say about 4 cents. Just from range high to range low there. I mean, it's a substantial move. It's about 13%. But you just got to be really careful. You're going to have to wait for the breakout. You're going to have to get past the moving average here. You're going to have to get past this trend line. I would just be, it's not something that I would be very inclined to take right now, to be perfectly honest with you. DDT, what up, man? How you doing, bro? Good to see you in the chat. Just looking at Cass get wrecked, bro. So bad. Got House of Trades in here. What up, man? Good to see you as well, bro. Thank you for being here. You know what we haven't looked at is Solana. Let's look at Solana and then probably wrap this thing up and get out of here. All right. Flirting with the buy zone. So this was a strong like horizontal level right here. And that is right about 92. Yeah, that's kind of coincided with this bounce that we saw before. This was a good play that we had. But that's when all the liquidity was down here. You know, all this was liquidity. We had bounce, 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 bounce. All that bounce, that means just a boatload of liquidity in that level or at that level. And then we moved up again. So yeah, I mean, we had liquidity again, but that's all, it's mostly gone. You're going after some old stuff now. I don't know how much of that's still left on the table. Ultimately though, yeah, for me, you got to get back above this horizontal. You're going to hear me say that a lot, but like, I'm not really in the business of taking a long straight into an area of resistance. It just doesn't jive for me personally. So for Solana, if you're looking at a play on Solana right now, getting above the moving average here, looks like the 50 at about 97.48, and then taking a play up to the previous value area high where you saw the support here. Not too worried about that wick down, but it pretty much keeps you front running pretty much all of these little bounces here. All right, so what would that look like? And it's also, I guess, yeah, 0.5, right? Just above this little baby range you got on the top side of it. So what's that look like? Not too bad. About a 9% move. I think that's plausible. I'd probably front run that a little bit. Bring this up. See, that doesn't leave you a lot of room. I'm so much better at trading like mean reversion and you know, when we have interactions with the support and resistance levels where it's very clear. These breakouts again are just not like super high conviction for me. I mean, you are going to get a change of character if you get the breakout retest, but it's like at that point, like, you know, where are you putting your stop loss, right? It's not as clear in my mind. And you're not getting a sweep of liquidity either, right? Because liquidity is clearly down here. I mean, it builds up as this is price actions going up, but the big piece of liquidity is now down here. So I would be very careful of that. But again, if you see a change of character on the daily, you know, that would be a good thing for Solana. I would be more apt to look for a position or a long position if you were to get that breakout, right? So big candle through the zone. You know, that's what you'll be looking for. Retest around this level here at about 97 or so. You get that retest there, and then you're looking for a move up, probably to retest the high of the range of this little range here. Not much of a range, to be honest, but again, you got to keep it quick. Oh, Betty, what are you doing, Betty? Ain't nothing. You're being boring. That's what you're doing. Betty. Let's see here. Let's get all that off. I wish I could hit delete. DDT, when you get a chance, tell your homies. Let me click this thing and then hit delete. And then it deletes. That would make my life easier. Look at that. You see this sometimes. They'll put an order right under the price action. Yeah, open interest though is still going down. This is interesting. CVD is not really. Nah. Don't think I can really get behind that. That's interesting. Spot is holding price somewhat. Perps are bailing. That makes sense. Yeah, dude, I gotta get the pro version of this. I'm gonna reach out to the dude again, because we were supposed to set up a phone call. Never actually happened. Because I need more data. Because just being tied to futures sometimes can be a little bit misleading. So this is the daily degen. That's looking like it wants to get stopped out. Ain't no biggie. What are you guys at? Still 69% doom? This is just not registering for me, man. Is what I'm seeing. CBD. Open interest. Cubanadian, what up, man? Gang, gang, gang. How you doing, bro? Good to see you in the chat. So you got some orders, what, 71.1? Okay. Oh, so that's this right here. For show. For show, for show. What's the delta on that? 549. Interesting. Maybe we get a spike here from open interest in CBD. I mean, this is on the 5-minute. MMT is way overpowered. Can get hella confusing, but it has decent tools in it as a whole. Yeah, dude. Dude, I keep seeing like all the updates. It is crazy. Some of the stuff that MMT is doing. I definitely want to get on the pro. Dude, that's a big delta though. 71.1. I think maybe CBD and open interest are just maybe lagging a little bit here. I wonder if I was on a smaller time frame. DDT, what are you showing on like the 1 minute and the 3 minute? Are you seeing like some curvature in CBD and open interest? Sorry to put you to work, man. Let's look at Kayotaka real quick. This is the only reason I bring like Kayotaka up much anymore is because I can get down to the 1 minute, a little bit more granular. Let's see what you got going on. Man, that is slow to load. Let me close some stuff. Don't need that. Not your computer? Okay. There we go. Yeah, see, that's not aligning. Something's up, man. You got passive orders on the books, but... And this, like, right here, just from here to here, open interest is going up, CBD is going down. Like, that's kind of contrary to what you would want to see. And again, you got this order block down here. Just buy side pressure. That they're not letting this go. They're definitely not letting this this order go. It's staying on. Let me pull open interest up just a little bit now. So that's still... The only thing that I could think of with open interest right now, because it's still working its way down, is that people are closing their positions from shorts. But with shorts still being aggressive, it doesn't give me a lot of confidence in seeing a big move up. But it looks like it wants to. It's kind of interesting. See CBD still trending down. Let's go over to Grok, or not Grok. What I got up? Chat. Let's look at chat. Let's see what chat has to say about this. I'll do this all the time, man. I got no shame. Post it in there. Price action horizontal. I'll say ranging. All right, along with open interest. What are your thoughts? I'm gonna say I'm leaning towards a rejection from the current level. So I see your question in the chat. CBD down, OI down, price up. What does it mean? What's happening? What up, Crank? How you doing, bro? Just kind of going through CBD open interest, right? It's one of the things I like to use when I'm trading. So give you a little breaksy downsies here. Let's see here. Let's go here. So one of the things I'm looking at, right? We got a pretty clear range, kind of consolidating. Clear order block down here, and there's liquidity down here, 70,250. All right, so you have order block as well as liquidity kind of lining up at 70,250. Could be a little classic accumulation, manipulation, and distribution, but just current time frame, looking at the CBD trending down, price going up. There's a divergence between price, CBD, open interest is going down as well. So kind of leads you to believe that positions are being closed. I think that's a close from people that took shorts off of the 72 to 74K range. All right, took those shorts down. I think they're starting to close those positions, take the profits essentially. And now, just kind of looking at this closer, more near time frame movement and seeing this divergence right now. So I'm trying to kind of pick up like, hey, can we see a move back down to this order block here? Something I'm taking a look at. So people are asking about what does it mean. I kind of just explained what I perceive it as, but every once in a while I go over to ChatGPT, and I'm like, hey man, what are you seeing? It says your read is actually very reasonable here. Let's go through it step by step. Let's see what chat has to say. All right, price is ranging. Yep, we got that under local resistance. All right, we're on the same page there. Multiple attempts, correct. Yep. CBD is now making lower highs while price is holding flat. Meaning aggressive buyers are fading. Less market buying is lifting the offer. This is the first warning sign of a rejection. Okay, so that kind of aligns with kind of what I'm feeling right now, right? Because that's what I said. I was like, I think they might see a rejection from here. Open interest is trending down. Means positions are being closed, not open. So the move up earlier was likely shorts covering, profit taking, not aggressive new longs building. Now that covering is ending. What the combination usually leads to is price flat, CBD down, OI down, and typically means participation is disappearing. Markets rarely break higher when participation is falling. Rotation back toward liquidity below. So that's the most probable outcome. And see, that kind of aligns, right? I mean, we'll see what happens, right? Anybody can come in and they can buy and they can push the market in any direction they want to. Let's see. Let's go there. Quick trader summary. Your bias towards rejection makes sense. Flow currently shows momentum fading and participation dropping, which usually leads to a rotation lower inside the range. So there you go. Kind of on the same wavelength here with chat. And I love that. Honestly, do not be scared, or do not like be weird about ever bouncing some of your stuff off of like ChatGPT or Grok, whatever the case may be, to kind of back yourself up. Like, hey, this is what I'm seeing, especially if you're learning it, right? If you're learning something new, right, this will help with your, I won't say your analysis, but like under your understanding. Okay, what does that mean? Like when you literally ask, hey, what is CBD down, open interest down, and price up? What does it mean? Just go straight over to Grok or ChatGPT, take a picture, right? That's what I do. I take a picture right here. I upload that picture and be like, hey, here you go. And I kind of gave it the trend lines. Be like, hey, this is what I'm seeing. And then I gave it a little bit of like, this is what I'm thinking. All right. So, hey, I'm leaning towards a rejection from the current level. All right, cool. Let's approach that. So it'll tell you what it's thinking in terms of your question, but it will address your bias. Now, one of the things I've been clear to do with ChatGPT along this kind of like, going back and forth with this is like, hey, I want it unbiased. So whenever it gives me the answers, I'm like, I don't give me, don't repeat things. And also I was like, hey, give me an unbiased answer. I don't want it to side with me, because AI, you'll see, has a natural tendency to kind of like validate you and what you're thinking. So you got to be very careful with using, these AIs. Make sure up front that you tell it, hey, don't validate me. I want an unbiased take on what you see. And that will help you get a little bit more straightforward answers. All right, let's go back to Kayotaka. You are starting to see a little bit of rejection there. We'll see if that plays out. They did. I won't say they took the orders off, but it doesn't. I don't see the orders right there anymore. So they kind of piled in. It was kind of quick. I think they may have just been taking this move up, because those are gone already. You can click right here, just kind of moving it to the right. You're just normal right now. You did have some bigger orders, so they drive the price up, get that rejection, and this could be a quick scalp for big money. Just this move from here to here can make you a lot of money. So they put that on there real quick, drive it up, right? Retail will react to that. But coming over to the CBD, man, same story. CBD still aggressively, trending to the downside. Open interest still trending to the downside. Just understand that open interest does not mean it's going to drive the price action. So understand that. Crank, I appreciate you, man. Yeah, if you guys could hit the likes, that would be much, much appreciated. Thank you very much. Again, go check out Crank, dude. Crypto Crank he's doing it, man. Like, he's showing you all the trades. He's got a good community. He's a good dude. I've actually talked to him. So, go support him as well. I would really appreciate that. Any of the homies in the community that are good people, I'll get behind. We got Chris Weeks in the house. How you doing, man? Good to see you. Oh, we got Crank in the house. Yeah, man. Yeah, Crank's good peoples. So, all right. But yeah, I think this is kind of key right now. You got some volume right here, right? You see the volume kind of working its way out. And then you got this gap. So you get the rejection out of here. You get a continuation of CBD. And then if you see the open interest start to move up. So this is one thing you want to look for, right? You start getting that absorption, and then you start looking for, does CBD continue going down? If it continues to go down, this is really annoying. TradingView is so much friendlier of an interface. But then you see open interest start to go up. What does that mean? Right? So first step, get some absorption. Next step, you're starting to look at your open interest. Open interest starts to work its way up. Even go flat's okay. But if it starts to work its way up, what does that mean? That means that positions are being open. People are positioning themselves. Well, if they're opening positions and CBD is working its way down, understand that shorts are aggressive while positions are being opened. What does that tell you? Well, that tells you that your probability, I'll say, is to see price action likely go down. That's the higher probability scenario, is that you would see it go down. I just look for these little gaps here in the volume, right? So you got high volume area here, high volume area here. Now, does that align with maybe a potential fib retracement level? That's something you could take a look for. And let's see. All right, so just take it from this low to the high. And I mean, that's really right at the high volume area node, to be honest with you. So that's probably not going to work in terms of that. You could take it from this low, but once it sets a new high and then a low, it's a little janky. Still pushing though, man. Oof. Still pushing. There it is. So this will be interesting here. I'll be honest, my bias was towards the short. Are we just getting a liquidity sweep? Okay, not, man. May just break and retest. It's alright, there's always two ways to play this game. It's pushing. Alright. Let's go look at Trading View. Infinite Team, TA, what's up, dude? Good to see you, man. Mine mates. Short and a bounce. Short and a bounce. We'll see, man. I mean, right now, you get a nice move through the area of resistance there. Now what you're kind of waiting to see is, do we break this trend on the CBD? CBD starts pushing up. Open interest did get a little push up. It could just be a liquidity. Oh, man. See, they're piling in orders underneath again. Somebody's trying to push the price. Look at that. So they try to push the price here. Now they're trying to push the price again. Interesting. These ones are always a little bit tougher for me, to be honest. What I prefer to see is you get these areas of consolidation, this range, come down, get some of these orders filled, and then if you're seeing that divergence between the price action where CBD is starting to work up, open interest is working up, that's when I feel a lot more confident about getting into something. But right now, you're looking like you're trying to have a little breakout retest of this zone right here, but they're putting orders right under it. So a lot of times, I won't say a lot of times, I will just say as of late, as I've been looking at the books here, they put these orders underneath. They're trying to push the price up a little bit. So, damn. CBD on Market Monkey Terminal looks a lot different than Kayotaka. That one's a lot more decisive. Look at that. Open interest. You see orders on the Market Monkey Terminal as well, underneath. The problem with this, for me right now, is this. Ideal state for me is this is up, and this is up. All right, let's look at the order book itself. You got a delta of 631 at 71.3. Okay, so that's right here. It's kind of hard to fight against that. So what they're doing is they got to order right below the price action. Almost acting as support. See if that gets filled. That'll be interesting. There we go, working its way down. Yeah, I don't know. I just don't know that that's enough for me, to be honest. Sometimes the best trades are the trades you don't take, man. Especially when you're not 100% confident. What's Alex always say? Trading is waiting. Because I'm not gonna sit here and take a short knowing I got a freaking order right there. Like that typically doesn't pop up. If you're looking for, you know, that sweep of liquidity, sweep the highs, whatever you want to call it, liquidity grab, S&P, freaking 500 names for it. But taking what liquidity is on the table from here, you know, if you're taking that and then pushing back down into the range, get below, you know, let's say the value area high of the range or just the highs of the range. But CBD is not cooperating. Open interest, it's almost, a lot of things are inverse of what you would kind of expect. But CBD pumping with an order directly under the price action, there's no way I can take a short based off of this area, you know, knowing there's some resistance right here. From here to here, you know there's resistance. When I say that, I'm saying from this high to this high right here, right? You know there's some resistance on the table. You had a high volume area node, which you're just above right now. You know there's liquidity up here, what you would have liked to have seen is a continuation of the CBD. You get a continuation of the CBD, that makes your life a lot easier. This makes your life a lot harder. This right here, this order, this is a passive order on the books, that also makes your life a lot harder. Taking a short into that is kind of silly. All right. So the one, it looks like they took the one off at 71. Is it 71.3? Nah, there's still some. It's still pretty high delta there. And it's gone. Not necessarily. Not necessarily. So what you look for right here, coming over to the order book, one thing, the reason I like to keep this on, you got 71.2, 71.3. Your delta is still about 470, 460. What this is I have a threshold on. So it's just understanding that how the way I have it set up is my threshold is probably not being met. So if the threshold's not being met, you won't see it actually populate there. So that's all. There's still 71.2, 71.3. That's why I keep this up here, just so you guys can see that there's still a buy side pressure there, about 71.2 to 71.3. And again, the delta there is probably, it's about 500 right now. So just not as high. It's not as high as it was. But yeah, I mean, you would love to see that off the table. You see that off the table, see this CVD start to bend over, then we become players. But yeah, price action currently sitting at 71.4. Just understanding you got buy side pressure at 71.2, 71.3. I mean, so even if it pulls back right here with this high volume area, I know it is, that would be a reasonable expectation to see a little bounce out of that area right here, right? And this aligns. This kind of shows you that, yeah, there's orders sitting on the books, you know, waiting for, you know, price action to come back down here. Yeah, but step one, right? Getting a little, it's getting a little hung up right here in this zone. Let's see. It's always tough bouncing back and forth between order flow books here. What's that put you at? 0.382? See, that's bullish continuation as well, right? So understanding fib retracement levels, 0.382. Coming down to retest that level and getting a bounce out of that level would be typically lead towards a bullish continuation. We're looking at 71. Yeah, there's still a little gap underneath though. Go back to Kayataka, see what it's saying. Yeah, so there's still orders here as well on Kayataka, just not as much. Same thing. Threshold's just not being met. So somebody is probably got a little scared out as price was pulling back. They're like, oh, this might actually get filled. And somebody, or, you know, half pulled pulled some of the orders off. There you go. So CVD did break through a little bit more decisively. It's so weird, man. Like, this is the 1 minute. This is where I struggle with these two books, because this is the 1 minute, and then MMT, because I'm on the free version, I can only get the 5 minute. Yet, this came in, this big push on CVD came in, let's see, 13.15. Let's go back to Kayataka. And at 13.15, you were right here. You would expect to see a much larger push on CVD at 13.15. Still trying to push though. Chillin'. It's the boring part. Lost our music. We need some music. There we go. Got some music back. Still wanting to push. Trying. Might just be retesting the high there, man. Retesting the high. We shall see. Let's see, 71.7. Got some sell side pressure. Where's that put us at? 71.7 right here. That makes sense. Let's push this up just a little bit. 71.7. Cool. Yeah, you can see some of the passive orders that are sitting on the books right there. Pretty light colored, so there's not as many. Chilling. All right. Make a move, Biddy. Come on. What's your opinion on 1-to-1? I'll do it very rarely, to be honest with you. 2-to-1 is usually my going in rate. Like, I typically, like, a lot of the trade setups I look for, at least intraday wise, are 3-to-1. And then I'm definitely willing to settle for a 2-to-1. Like, I don't think twice about that. When it gets under 2-to-1, like, this is when you start kind of skewing your, you know, the statistics of trading, right? So, like, I mean, you have to win substantially more trades, right? You would have to win 2 trades to 1, like, you know, to be profitable. So it's kind of up to you, man. I mean, to each of their own, but I try to stick around a 2-to-1 most of the time. This is tough. I don't know if we're just getting like a sweep of the high or what. Yeah, exactly. But isn't it more likely to hit TP since the TP is not so far away from the entry? No, that's not necessarily true. And why I say that is because it's all dependent on where your stop loss is. And it's all dependent on where your TP is. Let me come back to this, and I'll show you what I mean. It's okay. Yeah, we'll just keep it on the 3 minute. That's fine. It doesn't really matter. So let's say you were to take a short from here, and you want to go 1-to-1. Right now, you're at a 1-to-1. Okay, but let's say you wanted your TP to be right here at the 50 SMA on the 3 minute. Well, this is a 0.56, so now we would have to lower it. So it's all based on, a lot of times you'll hear me say, it's all based on the wick, right? For me, for my personal trading and the way I execute, like this right here could turn into a 3.5. Because you're saying, hey, we came up, we took liquidity off the table, right? In this zone here, above that zone, you know you have liquidity. Right, so we came out, we took the liquidity, got it. You put your stop loss above the wick and you've turned it into a 3.5. Now for a 1.1, you're doing this. Yes, that may play out, right? Like that's fine, but if it doesn't, look at how much like more you're exposed. Like it's a little silly, especially if you're putting it way above here. Like if you break this is the 200. If you break the 200 on the 3 minute, right? Like why would you put a stop loss above that? You know what I'm saying? So like it's all about like where your stop loss is, like, and what kind of risk to reward you're getting. For me, I typically like to go just above the wick, right? So like this one literally would have played out very quickly, but there's no way I could have took that one just based on looking at CBD open interest. The only thing that was like keeping me like, what's going on here is the open interest, right? And now we know we have orders sitting on the books. What do we say? 70,200. So you got some orders on the books at 70,200. That's gonna be tight, man. it's going to be tight. So it's more about defining validation points where if it crosses that, it'll most likely keep going further. That, for me, yeah, that's kind of how I treat it. That's more so how I treat it, is like, okay, where's your line in the sand, right? Like for me, you know, where's kind of the starting point? Well, starting point for me would be in this zone here, probably as far as there, right? And just kind of looking at where we had clear areas where we were rejected, right? Because what's happening here? When you get a rejection, just like I said, hey, I'm gonna put my stop loss right there above the wick. Well, guess what people are doing? They're putting their stop loss right here above the wick. So they got the stop loss, boom. People got their stop losses right there, boom. So these people are potentially still in trades. These people are still in trades. Got it. And so all of this turns into liquidity. Extend it out. Boom. So if you were looking at like a liquidation heat map, this box right here most likely would have, you know, it'd probably be pink, right? Depending on the time frame, but you probably have to go down to like the daily or the 12-hour. But right here, you would probably see liquidity, right? And this is where stop losses are, liquidations, where people would get liquidated, right? So these people, like, let's say they didn't get out. Let's say they didn't take this trade down to, you know, the 50 SMA, whatever the case may be. All right, they round trip this thing. Now, all these people just got wiped out. This is why I love to trade this way. All these people right here just got wiped out. They're done, okay? Now, what is the incentive to continue to push the price action up when all of these individuals just got wiped off the map? The exchange just sucked up all that money. That's the exchange's money now. So now they're happy, right? And these people right here, they're sad. Boo-hoo. Cry me a little tear there. They're sad, right? And they're out of their positions. And then what I've seen over and over again, takes the liquidity, and then it goes in the direction that they were anticipating anyways. So had they just waited until this liquidity got taken off the table, like so, and then got into a position, I'd say the probability is a lot higher of seeing a move that they were anticipating from the get-go. Now, the thing that's hard about, you know, using CBD and open interest is that as the trigger, right? Even though this played out, so this is like a trade I would have taken over and over again, but recently I have not jumped into this as quickly because I like to have that trigger or that validation of knowing that open interest and CBD is aligning with it, and that statistically has just improved my hit rate. So my hit rate is up, you know, probably around like 70 some percent right now. So if you think about that, if I'm doing a 2-to-1 and I have a 70% hit rate, like that's really, really good. That's really nice. But a lot of it is seeing that this criteria kind of gets hit with saying, hey, I don't have that liquidity above or below me, right? I get this liquidity swept, taken off the table, and then I see the CBD and the open interest aligning with the narrative, right? So in this case, you start seeing like CBD going down, you see open interest spike. So this is what I'm talking about right here. You get that open interest spike. What does that mean? Well, that means positions being open and you can see shorts. So aggressive shorts. So this actually did kind of hit the wickets for me. I think I was just busy explaining to you, you know, kind of what I'd be looking for here. Yeah, so beautiful, right? And then you get below. So this candle right here, you get below the high of the range. That's where you say, okay, let's go. So taking it up here would be too aggressive in my mind. And then taking it where it could just be a retest, also too aggressive, especially when you know you had orders on the books. But that candle that closed below and back up below the high of the range, that's your go move. So now it's just a matter of saying, okay, we got to move, like it drops some more. At this point, I would have stop loss to entry or get the stop loss to entry. And that's how you play on house money. Straight up. And then it's up to you on how you want to, you know, exit. And so there's a few ways to do that. We can talk about that. me see here. Let me get back. Let me see if we got any more questions. 1/3, 1 to 3. Yeah, up to you on how like you want to, divide up your bag or play that game. Some people are 1%, some people are 2%. For me, I take $10,000 and put it in a trading account, and I like to. I mean, sometimes I'll full bag it, honestly, but I have usually pretty tight stop losses, like usually about 0.3% or so. So like what I'm actually risking is a little bit different. And then other times I'll do like $1,000 trade at like 80x leverage, because I still know that's outside the threshold typically of somewhere. Usually I have about a 0.3, 0.6% maybe. It really depends. Usually a 0.3. All right, so let's talk about this since I missed it. Waited all that time to miss it. It's silly. Being live. So we were talking about TPs. So let's talk about that. Hey, I might as well give you the sauce, right? We're gonna be on here. Fixed range volume profile, cool. Let's do that. Let's back up just a little bit. How much of this is in the range? Could probably incorporate that as well. Really, all of that is in the range. Okay. Let's get this box out of here. Let's just do a fixed range volume profile once it dropped into this range. That is interesting. Oh, okay. Okay, so this is kind of weird. All right, but you got your value area high rate about 71.3, and it looks like your low is about 70,006 with your POC at about 71. So let's go to trading view to look at this, honestly. So VWAP is a thing that I like to look for a lot. If you're below, you're kind of looking for shorts. If you're above, you're kind of looking for longs, generally. But let's do a fixed range volume profile on this. So I think this will be a little bit more clear. This is the only part about using these order flows. They have not caught up to... Why do I have an extension? Why is fixed range... Oh, there it is. It's already highlighted. Stupid. Okay. Call myself stupid. So here you go. You get below the high, right? We're pretty much playing on house money at this point, or would be. Stop loss above. See this? I don't even know. You're not even getting a 2-to-1 with this, honestly. So I guess I didn't miss anything, to be realsies. Keeping it real, I don't think I missed anything. Nah, it's not worth it. Not worth it. But anyways, so taking the fixed range volume profile, like if we're looking at TPs, like for me, like this stands out to me. Like let's just ignore this for now. POC, high volume area node. Like there you go, there you go. Those two areas kind of in confluence. We're like, yeah, that looks like a logical spot, right? You get below the high, and then it looks like it's retesting it right now. Do you see the continuation down? Now this could be a little different. Since it's established itself, you're getting a little retest of the value area high. You know, you could look at something tighter. And then you bring that there. So that'll give you a 2-to-1. Not saying I would take that right now, but I'm just saying on how you can play that game. All right, so retesting, obviously you're going to have to see some of the selling pressure. You're going to have to see a wick out of that area. You're going to have to see CBD open interest align with the narrative here. You got the stop loss above. your candle right here on the 3-minute, you got a high volume area node as well. Kind of add a little bit of a buffer, just below where you could have a stop loss at. That's a super tight stop loss though. But yeah, this is generally kind of how I'm looking at things. Hopefully that makes sense, right? Like I'm looking for a logical exit. POC, high volume area node would make a lot of sense. If I get an aggressive drop sometimes too, and I'll take that as well. Like if I get like a big candle, see how these candles are pretty large. If I get a big candle like from like right here from the low, and it's just short of the POC or the high volume area node, I'll pretty much close it. I may not get the full 2-to-1, and that bites me in the ass sometimes, to be honest with you. Yeah, man. Alexander G, thank you. Hope you have a good one. Yeah, Infinite Team TA, man. I mean, yeah, it's kind of everybody has their own way, of skinning the cat there with risk to reward. I would just say, a great starting point is only risking 1% of your portfolio. That's kind of the rules of the road that a lot of people teach in the beginning is 1%. So however you want to do that, just make sure that your leverage, supports, whatever stop loss you're using. That's pretty important as well. Yeah, DDT, of course, man. All right, get rid of some of that. Yeah, so I say like the cleaner setups here, like in this case, that I would prefer is we talked about that 70,250, right? 70,250. We know there's an order block there. We know that there's liquidity down there in terms of liquidation events. If we break below this range and we go touch that in all the wrong ways, and then we start pushing back in, that's when we would start talking about. Now that would change too, probably change the value area high or value area low. That would probably shift a little bit as well. But once you're reestablished back in the range, that's when you could start looking at, I would like to see that closer, to be honest with you. Really don't like it being that far away. Full transparency. An SFP, like it doesn't happen all the time where you're going to get the, an SFP right where liquidity is. But when you do, like let's just talk notional for now. Let's talk a little notional. So let's say this 70,250. Let's draw we'll say a green line. Right here. Shift, boom. We'll make it green. So let's say, for argument's sake, that this is where liquidity is, right? And that's it. Actually, there is liquidity there. It's not where the bulk of liquidity is. It's not where, the hot spot on the map is at this moment. But if I was to see the price come down here and take this liquidity off the table, and we were to move back up below or above the value area low, I'm thinking about a long. Right? That's what I'm then thinking about. And then of course, your stop loss will have to be supported by the low, obviously the wick that comes down here. This for me, I like a lot better. Now, concerning, right, is you may be a minute before you can get your stop loss to entry. Why? Because you would run straight into the POC, you would run straight into the high volume area node, and that likely is to push price action like this, right back to where you started. That is the likely scenario. And then can we get the move up to the value area high? What makes you feel better about that is that's when you come, for me personally, that's when I go over to the order book, right? Like I use it in a very simplistic way. Let me go here. And then what I'm looking for is when we come back down, or even we're at that level, when we get it above the value area low, then I'm looking for open interest in CBD to support my bias. What would that mean in that case? Because I'm looking for a long position, is that I would prefer to see open interest going up and CBD going up. Just means that positions are being open and longs are aggressive. Very simplistic. But what we would also see is that these orders would get filled, right? Orders would get filled, open interest up, CBD up, and we wick down, we get that SFP, we get the manipulation, whatever you want to call it. There's 15 different ways to skin a cat when it comes down to it. But, that would be the preference for me in this case right here, if it were to come down. So that would be a nice little setup. And what does that give you? A 2-to-1. So like, let's say you want to play the POC, right? Let's go back to your 1-to-1 thing. Now, your stop loss has to be right here. Do you think that's safe? I would argue maybe not. There's a very real possibility to kind of hang out in this area before you see a move back up. I've seen it quite a few times where I'll come back and retest down these levels, or at least the low, or get really damn close to it. So, you can see right here, like, nice push up, but what it did, come all the way back down. Pretty damn close. Didn't go below the wick, but still, it came pretty damn close, right? So this, and you got, let's say that this low was accurate in this case, which it's not, but let's say it was. You pushed above it, you got a candle close above it, but then all of a sudden, poof, back down. So your stop loss stays. So that would be kind of my argument there. And then if this was a 1-to-1, right? In this case, look, this would have stopped you out in this case right here. So I'm not saying it, like, it's not any one way is the magical way to do things. It's just kind of the way that I've approached it. I've been stopped out enough times. I've been pissed off enough times that, I tend to kind of do it like this. And I side towards the 2-to-1. I make sure that I'm finding, if I have something down here too, that's like, if I have a big Fibonacci retracement level, if I got a big high volume area node, if I got something that's like a freaking magnet, I may buffer that in and be like, hey, let me put my stop loss a little bit below that just to avoid having that issue. So, but that would be your 2-to-1. I'd probably front run that a little bit. Do an actual 2-to-1. Got your volume there. Just keeps you below the moving average. Keeps you just below the value area high. And, a very logical movement of price action where it pushes up, POC, high volume area node with a rejection, and then bounce, right off pretty much where the value area low is. That's a very logical move if you're talking about price action. So, are market orders just as important as passive orders? Do you think big institutions also? Yeah, they are, man. So that's kind of the big thing, right? So when you're looking at the order books, and you're looking at, what's on the books, right? Like when you're seeing this stuff, this is all passive. That's all passive, right? And this is now telling you kind of your directional bias based on what the market is telling you. All right. So yeah, I think they're both important, and you're using both of them, right? Because you're getting ahead of the price action by saying, hey, cool, like I know that there is an order block here. I know that there's buy side pressure here. But this is then kind of validating, hey, what's happening? Like, it's not always once we interact, but like, hey, what's happening kind of currently with the price action? This is a better indication of that for obvious reasons. But yeah, I think they're both important. Long story short. And some can, like, it can kind of indicate to you whether you're seeing absorption, what may be driving the market at that current time. I know, this is only the free version. So, I can only go down to the 5-minute. I don't even have spot on here. This is all futures. But so far, it's worked pretty well for me. If you guys want the pro version of this, I do have a link, I think, maybe in the description. I have to double check that. Gotta double check my links, but I'll try to drop that in there. But yeah, man. Do big institutions use market orders? As far as I know, they do. But you will also see that, they'll also ladder into positions as well. And they will put orders on the books, take them off the books. They'll do all kinds of wacky stuff. But yeah, I think a lot of institutions will probably do OTC, to be real with you. I think that's probably the more likely scenario for big money. Like institutional money would probably be OTC, would be my guess. I'm not a super big whiz on that, but I will say that, my understanding is that they use both limit and market orders. Because let's say you get an aggressive move to an area of interest, right? Let's say, like, for a company, like they want to lower their cost basis to X amount, and something happens in the world and the market pulls back. I wouldn't put it past them to want to get into a position, quickly, or get out of a position quickly. Let's say something happens that, they don't have, you may not have time to put a limit order in, or you're gonna have to put it below the current market value. So there's that. But yeah, not a big whiz on that, man. Probably not the best answer, but I would imagine they're using both. Cool. All right, homies. I think I'm gonna get out of here. It's boring. Not a whole lot going on. There's one little opportunity here, but I wouldn't even call it a great opportunity because CVD and open interest wasn't really validating what I wanted to see. So it's all good. Spent 2 hours on here with you guys. Hope you guys learned something. If you did, please like and subscribe. I would appreciate that. I'm doing it for free. Giving you the sauce. Every Tuesday, Thursday here at 3 p.m. Eastern. So hop on here, check it out, learn something, or just tell me I suck. I'm cool with that too. But you guys have a good one. As always, trade safe, be safe. I'm out.
Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 go. Hustle hard, hustle every single day. I'll be making moves till I'm buried in my grave. To the system, I don't wanna be a slave. I've been doing shit my way, or the highway. And in the driveway is a nice range. Cause I grind through the climb, I invite pain. You'll never hear me, bitch, nah, I don't complain. Just gotta flip the switch and you can go and obtain anything you want, anything you need. Your mind's got the key ingredient, it's belief. They deceive with the negativity, but I just slide right by that energy. Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 go. You got a mind, but even that could change. You could flip the gray matter like some batter in your brain. That's why they say, fake it till you make it A. And if you play that game, then you just might make a change. Rearrange all the bad to okay. Take the worst thoughts saying, turn them to a game. Take the best thoughts saying, put them on display. On repeat in your brain till you're feeling no more pain. Never slow yourself down, you can do some more. Push past all the pain and you'll find a door. Open it up and finally explore everything that you thought you could never do before. And even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer listen to no, man, I still go, go, go.